Hello everyone and welcome to This Week in the Markets. This week we saw some progress in the fiscal cliff, although after much talks and going through various proposals, we are still left in a state of confusion. The Treasury Department says that the debt ceiling could be reached at the end of this month. Then there is the election in Japan over the weekend, which could be a watershed event that changes the country's economics. And the Standard & Poor's broke the trend and upgraded Greek credit rating. We'll discuss this news in more details after our disclaimer. So information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regards to your objectives, financial situation, and needs. There was a leap forward in the fiscal cliff negotiation last week, as House Speaker John Boehner agreed to accept a tax increase for the top earners in America who take home more than $1 million a year. Obama on his part will consider a budget concession on Social Security by changing the way inflation is calculated, which will reduce the cost of living benefit and help reduce the large government spending. However, the optimism was short-lived, as it seems like the negotiation is ending just when it just got started. On Wednesday, Boehner announced that he will try to pass a Plan B through the Congress that extends the tax cuts to those earning less than $1 million a year. Obama immediately rejected such a plan and insisted that the threshold be lowered to $400 billion. Boehner ignored such a pledge and said that he will pass the plans by the House, and the president can then either persuade Senate Democrats to accept the plan or be responsible for the largest tax increase in American history. For those who are familiar with poker, it is obvious that both parties are gambling to get the best deals for their respective party. The problem is, when both sides are bluffing and unwilling to stand down from their bluffs, the risk of no deal being achieved before the year end becomes quite high. And the stakes here are potentially 4% deduction in the GDP, thousands of jobs being lost in America, and potentially a credit downgrade for the country's credit rating, which Fitch has already warned could happen if the US fails to avoid the fiscal cliff. And while the market is focusing on the fiscal cliff, another problem is creeping up on the horizon, namely the debt ceiling. According to the Treasury Department, the US is just $60+ billion below its $16.4 trillion debt limit and is due to hit it at the end of the month. After this, the Treasury could buy an extra 6 to 10 weeks through some maneuvering of funds, but decisions will need to be made whether to raise the ceiling or face the shutdown of government activities. Obama has previously requested power to raise the debt ceiling without going through the Congress. This was not favorable to the Republicans because the debt ceiling is one of their best tools in negotiating a spending cut. In his revised proposal, Obama asked for the debt ceiling to be raised to a level that would not cause an issue for another 2 years. But even this is more than what Boehner is prepared to give, as his proposal entails limit to be raised for 1 year, conditioning on the approval of spending cuts. This standoff could further add complications to the negotiation process. And over the weekend, Japan's Left Democratic Party and ex-Premier Shinzo Abe regained power and received a second chance at trying to revive the second economy. The dollar-yen gapped up above the 84 level, and this news because the new Prime Minister has promised in his campaign big spending and unlimited quantitative easing to revive growth in the economy, and also to push the inflation rate higher. It is unsure whether the new Prime Minister could successfully persuade the Bank of Japan to engage in unlimited easing yet, but at least it seems like the central bank is feeling some pressure and has expanded its asset purchase fund by another 10 trillion yen today in its monetary policy meeting. The Bank of Japan also signaled that they will revise the inflation target at its next meeting in January, which the Prime Minister has repeatedly called for a target of 2% inflation. In the short term, we think the dollar-yen has rallied quite a bit, and we might see some buy on rumors, sell on the news effect as the market goes into the holiday season. But from a longer-term perspective, we think the dollar-yen is still at a historically low level, and if we see the new Prime Minister following through his pledges, we think that the Japanese yen could continue to weaken in the long term. In Europe, Standard & Poor's upgraded Greek credit rating by 6 notches to B-, and returning it to its highest rating since June of 2011. We find this quite interesting as it demonstrates a shift in sentiment towards the European nation, and it's quite a contrast to the multitudes of downgrade in the Eurozone in the past. We think this could be a catalyst for the euro as the currency is still priced for breakup, so any news that suggests the euro could hold together is going to be quite bullish for the currency. And that's all for this week in the markets. As our company is closing for the holiday season, this will be the last video for this year. The first This Week in the Markets video in 2013 will be on the 10th of January. So I would like to take this opportunity to wish you all a joyful holiday season and a happy new year. See you all next year.